All right, guys, super cool. Welcome back to the message. I just want to welcome all the subscribers and new visitors to the Independent Investor channel. First and foremost, just a premise, this is M1 Finance platform. Most of you guys are familiar with the platform. If you are not, the Independent Investor channel is affiliated with M1 Finance. Affiliate links are provided in the description of all my videos. If you do, in fact, click on any of the links, please understand that the channel can receive a small compensation. It's one of the few ways that I do receive some compensation for you opting for their service and for me providing this testimonial and run through. This is a real account. This is my account, so I just drop you right into it and show you the nuts and bolts of what we're working with. But I do not do these portfolio reviews just to show you what I have and what my holdings are. I really try to attach an underlying fundamental message in each one of them. And none more prudent than today, as I'm filming this video, coming off some pretty good volatility in the stock market. And you can really see how this portfolio is held up quite nicely. This is my Sector Spider ETF portfolio. And for you guys that don't understand what sector specialty ETFs are, it's basically a representative of all 11 sectors in the S&P 500. A sector being, for example, technology, industrials, healthcare, energy, materials, consumer discretionary, telecom, and so on and so forth. And Vanguard has made it really easy to invest in the sectors specifically by the use of specialty sector ETFs, and I own them all. I contend that if you're going to opt for this route of investing, which is somewhat experimental in nature, I'll explain a little bit more what I mean by that through the course of this video when I get into my strategic goals of this portfolio. But it is experimental in nature. There's some schools of thought that it may be just better to go ahead and invest in the S&P 500. And so to satisfy my need for that and my belief in that philosophy, I too also invest in the S&P 500 in my other accounts. This account is comprised specifically of sector ETFs. And the reason why I did that in M1 Finance was to exploit the opportunity in M1 Finance to provide portfolio redistribution of funds. Okay, what I mean by that is when funds flow into this pie that's indicative here, keep in mind this is extremely passive. I do not sell in this account. I only fund this account. So what you're seeing here is a funding schedule. I think I do about $25 every 2 weeks, so something fairly small. This is meant to replicate what could be indicative of a beginning portfolio, right? So there's a ton of people out there that may not know a whole lot about investing, but they know that they want to get started, and they may have a nice starting amount of $2,500 or more to get themselves started in the market. So this is meant to replicate what a new investor could be working with. It doesn't mean that they have to go and copy my portfolio, although you are welcome to do so. I provide the links of this Spider portfolio in the description of all my videos, and that way you guys can have full transparency and disclosure over what we're talking about today in this testimonial. But I think the real takeaway here is to understand that even with the volatility, these sectors have held up quite well. We're going to take a look at which ones have suffered a little bit more and which ones have held up quite well. But when these work together, it's really a beautiful thing. And that brings me back to my point of investing in all of the sectors. I own all 11 in this. Why do I do that? It's because that if you think that you can outsmart the market and just pick technology and real estate, those will probably be the ones that underperform. And the ones that you don't hold are going to be the ones that outperform. Okay, or hold up in a volatile market. You can see here Vanguard's Utilities ETF. This is one of two examples that I actually own in two different places. I actually do own this in my retirement account as well as Vanguard Real Estate. These are two sectors that I don't really feel as confident in owning single stock in, so I might as well just own the entire sector. Okay, now these are really cool. For example, utilities. If we click on the Utilities Vanguard ETF, it's going to bring it up here. And this is really interesting when we get down here and we view VPU details. For you guys with M1 accounts, you can actually follow with me. But if you get into VPU details, you're going to see the outperformance over this volatile time. So very, very interesting. Here's a fund that yields 2.75. A lot of you guys are crawling all over each other to get a 3 or 4% yield. Why not just own this specialty ETF and live to fight another day and understand that you own the entire sector in utilities? I don't know. It just makes sense to me. It doesn't mean that it's right for everybody, but certainly this decision to have some utilities exposure in this portfolio has paid off over this volatile time, as utilities are viewed as more of a defensive play through stock market volatility. But if we click down here, I own 69 holdings within this ETF. So I'm not trying to, throw darts at a dartboard to try to pick the winners in the utility sector. Not really that big of an ETF, to be honest with you. It only has 69 holdings, as the utility sector is actually fairly consolidated and has consolidated over the years, which is lovely. This is absolutely one of my favorite ETFs, and it's a great way to seek out your utilities exposure. But we'll go back here and I'll show you an example of a sector that's just been absolutely clobbered. And there's been a few. Honestly, Vanguard's energy is down here 44%. Now, am I concerned? Not really, because in this portfolio, as I stated, if you're a new investor and you're looking at this and you've just weathered the storm of volatility and you're down 4,300 from the market highs on the Dow Jones Industrial, you could have the opportunity to look at this and say, man, this is awesome. I'm absolutely diversified. Check. I'm absolutely getting some dividend income off of this portfolio. Check. I've actually weathered the storm and I'm still up a couple bits. Maybe I can look at increasing my dollar cost average contribution to this portfolio. Now you're stepping into a broader world of becoming a more informed investor, that of which is willing to pay attention to the market and not overreact to situations, but make concerted efforts to take advantage of dips when they happen, okay? And this is a perfect opportunity to look at this and say, wow, this portfolio is held up quite well. I'm still in the positive. I'm still up a little bit. The dividends are what's carrying me through right here. The capital appreciation that was up about $200 or so in this portfolio have since been erased on paper, I might add. But the dividends don't go anywhere, and these dividends are awesome. When these pay in these sector spider ETFs, they all pay at the same time. So it's freaking awesome. It's like 4 paydays per year for me in this portfolio. This is one of those portfolios that I have long-term visions of being able to build up over time and swap over and actually be a cornerstone in my taxable brokerage account with my larger firm, which is Bank of America, Merrill. But for now, this really works great, having these fundings flow into these lower underperforming sectors right now, and allowing the outperforming sectors to go ahead and work. So it's one of those defensive strategies that I stress all the time to make sure that you're aligned with your scale and aligned in a way that allows you to win in both up markets and down markets. And guys, I tell you what, man, if you're a new investor and you're watching this and you're like, man, this is incredible. This guy's just weathered some volatility. He's not down in his portfolio. He's actually up. And he's talking about things to take advantage of this dip and maybe set yourself up for more appreciation in the future when and if it happens, right? We're always looking to establish these positions and take advantage of the dips. And M1 Finance allows you to do it. Very, very simple. You could come into the funding section of this and just go ahead and increase your contribution and start funding it more. And when the market goes up, you can tailor it back, whatever suits your profile as an investor. But I just think the freedom and flexibility that you have in this is incredible, and it provides a heck of a service to both new investors and existing investors alike, guys. So I hope you enjoyed this re-review of the Sector Spider ETF portfolio. Haven't done one since the volatility has kicked in. I wanted to let it take a little foothold before we rolled it out, but hope you appreciate the transparency on the channel in rolling out this experimental portfolio, yes, but I think you can agree that it's one that's absolutely working, and it shows the power of being diversified in the stock market, as this portfolio absolutely is diversified in nature. So with that, guys, please subscribe to the channel if you like the message that we're putting through on the channel. And make sure and leave your comments at the bottom of the video. I do review those, and I'd love to hear what you have to say about what you think about this portfolio, how I've built it, how I've allocated to each of the sectors is interesting enough. Share the video with anybody who's looking to get a perspective on the market, I just being one of those. But it's interesting how the multiple accounts that I have demonstrate my ability to get exposure in a lot of different ways, and I think new investors can really understand. I really try to hit on those themes in each of my portfolio reviews as to why I do what I do, and that's the real takeaway. The shallow takeaway is for people to watch this and just try to mimic what it is that I do, and I would highly discourage against that type of activity. If you're tuning into my videos and you're really trying to understand what it is that I'm thinking, now you're winning. Now you're stepping into a much larger world of becoming a much more informed investor for yourself, guys. Thank you so much for tuning into the message, and good luck in your investment future.